Good morning, Richard Calhoun, real estate broker here in Silicon Valley for 40 years. We're here to talk about week 39 in the real estate market and what's happening. The green is my base URL. You add the purple to get to the individual things. We'll come back to that in a little bit. This is the first data slide. What this is doing is the blue line down here, the deep blue, navy blue line, is inventory. It's the percent of median. The yellow line is the 100% of median, so that's where you'd expect the data. The baseline is 2015 through 2019. So overall, you can see we only have 70% of the inventory that we're normally seeing. 70, that means we're short 30% of the inventory. The gray line is the number of new listings that are coming on the market. And for the most part, you can basically see the number of new listings coming on every week has been exactly normal. There's this huge spike, but that's timing with Labor Day holiday. The peak here sort of makes up for the valley here, and overall, it's basically been right at 100% of normal. What's been extremely unusual is the red line up here, the demand, somewhere around 20% above the normal amount of demand. And it's if you have demand greater than your normal and you have normal inventory coming in, you end up with a shortage. And you can see the general trend on the inventory has been downhill. We started the year with 40% more inventory than we had. Then we quickly got down to 100%. Then we were down around 20%, and now we're at 30% below where we'd expect it to be. But what's driving that is not a lack of sellers, but is the huge supply of the surplus of buyers. And that's everything in San Mateo County, Santa Clara County, single-family homes, condos, and townhouses. Now what we're looking at is the breakdown. So first off, we look at inventory. If single-family homes in Santa Clara County is basically around 52.5% of the normal inventory. If you just go up to San Mateo County, it's at 82%. So they have a lot more inventory relative to Santa Clara. Santa Clara is having a bigger shortage. If you drop down in the condos and townhouses in Santa Clara County, it's essentially right at normal, 104%. And with median and only 5 data points, I mean, I'd call that normal. And if you go up to San Mateo County, they actually have a surplus of condos and townhouses. That surplus dropped from 195% last week to 185% this week. Not a huge thing because there's not that many properties. If I was to guess, it'd be somewhere around 100 units, but still it's got a surplus in supply. But the big difference is this gives you, in a nutshell, why you need to look at details a little bit more than the media does with what's happening in the Bay Area real estate market. Because what's happening in Santa Clara County single family homes is clearly not the same thing that's happening in San Mateo County condos and townhouses. And when I'm saying San Mateo County condos and townhouses, I really mean the Bay cities. So the things that are on the Bay side of the ridge line. Moving on to the single biggest indicator, DUI. For DUI, you need the number of offers that were accepted. So the DUI in the last week for Santa Clara County is 19.8, call it 20, up from 19 the week before. So you've gone from 19 to 20. So you've had a little bit of a slowing, but that is not a slowing that I would be concerned about because, first of all, the market normally is slowing at this time of the year and is normally slowing more significantly. Number two, I consider anything below 40 to be a strong seller's marketplace, and 20 or 19 is so far below 40, you're not in the same league. Three, a 1-day shift over a 7-day period is really not much of a shift. When I'm seeing a shift in the market, that's 5 to 7 days for every week. So we're not changing rapidly. We're changing at a time of the year when we expect to be changing, and we're changing less often than we are. And we're so far into a seller's marketplace, some slowing down would actually be beneficial. Same sort of concept for San Mateo County. Clearly, they're doing a little slower with 28, but they've improved a little bit. See, and when the market's going down, the whole market does tend to go together. When the market's sort of stable, you have this bounce where Santa Clara County slowed down from last week to this week, while San Mateo County single family homes accelerated. So that contradiction is an indication that you're basically seeing statistical fluctuation. And I would actually support that. And then again, at the condos and townhouses, you've had a day and a half decrease in condos and townhouses in Santa Clara County. And in San Mateo County, you've had about a 2.5 day increase in days of unsold inventory. The Bay Cities is only thing close to a balanced marketplace at 38.5, but you don't go from a strong seller's marketplace to a balanced marketplace. Just to put it in perspective, I consider all the way up to 80 days of unsold inventory to be a balanced marketplace. It's only when you start going above 80 do you start seeing buyer having the upper hand in negotiations in a buyer's marketplace. Then going over to closings, what closings adds to the mix is the sale price. So you can look at the sale price to list price ratio. And anytime 80% of your sellers are getting more than their asking price, you know you're in a strong marketplace. And then in San Mateo County, 7.75, condos and townhouses right around 70% in Santa Clara County. And this is a little unusual. San Mateo County, they're actually getting 3/4 of the overbidding, higher than Santa Clara, but based on days of unsold inventory, the San Mateo County is actually a weaker marketplace. I have noticed that in general, San Mateo County is willing to overbid more and more frequently than Santa Clara County. It might be a makeup of the people that are buying, their wealth, who knows? It's just a little thing. Because just coming in clean, you would think if you have days of unsold inventory the same, you'd expect the same overbidding. If days of unsold inventory were more favorable to a buyer, you'd expect less overbidding, not more. Anyway, just sort of a side note. And then the magnitude of overbidding is coming in somewhere around 108, 109% in both counties in the Bay Area. And then condos and townhouses are 103.5 to 105%. So you can see the condo bidding is less of a magnitude of overbidding. The buyers aren't feeling as much pressure. This is looking at the days of unsold inventory over time. It's the single most important indicator. And here you can see some of the fluctuations from week to week. So you can see the fluctuation up this week is less than the week before, where you had this little peak. So this may come back down. I'd expect it to be higher. Again, you can sort of see the whole red area is the seller's marketplace, the white area is the balance, and then up here in the blue area is a buyer's market. We tend to spend very little time in a balanced marketplace. It's almost always transitioning from one marketplace to another. This is the overbidding distribution for each week for the macro market. So everything put together in a blender. And noteworthy from last week, we were up here on the orange line. So we actually decreased from last week. Normally that would be a slowing down on the marketplace a little bit or statistical fluctuation. Actually, I think this is an impact of the calendar. Last week, the week that we're reporting now, the purple line included the end of the month. The end of the month decreases the amount of prepaid interest that a buyer has to pay. So I think that in general, buyers that are tight financially are more likely to close at an end of the month if they can. And therefore, the overbidding associated with closings at the end of the month have been lower. And that has been accurate the last 2 months. And prior to that, I really haven't paid attention to it. But that's been true for the last 2 months, and it does make sense. So the outlying areas, this is the best month we've ever had. This is the worst month we've ever had. Generally speaking, you can see the months are pretty good. We were improving earlier this year, then we turned around and went down, and then we turned around and improved a little bit, but the improvement may be statistical fluctuation and just settling out. There is something very interesting in this chart, in my opinion, and that is these 3 new record areas, record appreciations are all in the expensive areas. So that might indicate that they're in general, they're lagging behind the overall marketplace, but it looks like maybe the high end is coming back a little bit. You can see the more global marketplace has been hitting their primes way back here. Even the missing expensive area was only a couple weeks ago, 2 weeks ago, that we hit the prime. East San Jose, Central San Jose, South San Jose dropped all the way down to 10%, where just 4 weeks ago it had 26% appreciation. And this is not year over year. This is of calendar year 2020 compared to now. And the reason I do that is to have a fixed data point. So this indicates in the last 4 weeks, home prices in the affordable areas in Santa Clara County did come down quite a bit. But is that just a statistical fluctuation? Because you can see back here, you went from 23% to 14 to 16 to 18, back up to 23. So there's a lot of just fluctuation in the prices. So you have to look, even though you want to look at it on the micro level, you also have to look at it on what's happening on the macro level. And you have to look at more than one index. So this is back to the URLs that I went over earlier. So the green is the root URL. You add the year to get to this live meeting on Saturday morning at 9 a.m. And I appreciate the joining in because I like the interactiveness. If you want to get to an archive of a specific episode, you put in the 8-digit year, month, date code. And then for the handout, which is not posted yet because I just got it done before I went live, but will be later today, you add the word handout and that date. And my contact information is the bottom. At this point, I pause and see if anyone's got any questions for me before I go into a little bit more detail and do interact. Any questions from those observing? Okay, now let's look at the breakdown a little bit. We're looking at it broken down by single family homes over here on the left, condos and townhouses on the right, the two different counties, and then we're going to be going down and looking at active listings, offers, and DUI. So active listings in Santa Clara County, we only have 706 homes. I don't know if you remember, but about 2 weeks ago, we talked about the record low was 700, and I think it was 2017, and whether we could catch it or not. We basically caught it last week, and we're basically still there this week. It's all going to be a matter of fluctuation on October the 5th on what the inventory happens to be. We may be higher, we may be lower, but we're essentially tied for that low, record low. You can see that we went up 1%. We went down 2% in San Mateo County. So you can see they're going in opposite directions. Same thing with Santa Clara condos and townhouses. San Mateo County went up 2%. The condos went down 5%. Then you look at the number of offers and, 112, 522. They don't mean a lot, just the number of offers, but it's in there just to give people a benchmark. What does matter is when you come down here, the ratio between the two. And you can start seeing that in San Mateo County, we went from 28.7 to 26, and this is a 5-week. So over the last 5 weeks, it was basically at 29. Now over the last week, it's 27. So San Mateo County single family homes has been actually accelerating, sort of counterintuitive to what normally happens at this time of the year globally, not necessarily from 1 week to another week. But then all of a sudden, remember, the expensive areas were all of a sudden having their best appreciation. So it's almost like the expensive area of the marketplace is coming alive, and that would impact San Mateo County more. Now you come to Santa Clara County, and you can see that from, over the last 5 weeks, we were basically at 20 days, and now that you're 22. So you've had a 10% slowing of the marketplace. Again, that isn't really significant, and it's also a very hot marketplace, so it really doesn't matter. And then again, over in the condos and townhouses, you can see that they're much slower, but one of them, San Mateo County, improved and Santa Clara County slowed down. So you can see the markets are going in opposite direction in fairly large areas. What that really means most likely is the market is basically plateaued and just floating along at the bottom of the hot sellers marketplace. Now we're looking at days of unsold inventory of the three components over time. So the red line is Santa Clara County single family homes. The yellow line is Santa Clara County condos and townhouses. And the brown line is San Mateo County single family homes. So you can see they're all pretty clustered. The condos and townhouses were doing fairly significantly slower than the single family homes earlier this year, but now they're caught up. I think it's basically people here wanting to buy single family homes, giving up and moving over into the condo townhouse market, heating that back up. So this is basically in 2020 when we were coming out of the pandemic. Now that we're out of the pandemic and the market's settling back down again, all three components are basically fairly close together, just like they were fairly close together before COVID was announced. This is my heat map of days of unsold inventory. The redder the color, the hotter the marketplace. The bluer the color, the slower the marketplace is. And you'll notice we don't have any blue. The closest we have is the expensive areas in Menlo Park, and they've improved from almost 80, I think, just last week to 55. But when you look at a small micro market area like that, you can have fairly significant changes that don't mean a lot because it's a small sample size. So a couple extra homes selling can make a huge difference in the days of unsold inventory. So basically, the paler the pink, the less hot the market is, but it's still hot. The redder, the hotter the marketplace is. So that just gives it to you visually. This is looking at the active inventory without an offer accepted, and it's the macro market. So you can see we're now somewhere around 1,700 homes on the marketplace, and you'd expect some number up here much closer to 2,350, maybe even 2,400. So you can see that huge shortage that we're having. And you can see last year we were above normal, and even at the beginning part of this year we were above normal. And back here it was interesting because a lot of people were complaining about the lack of inventory when we actually had a surplus. Now's when they should be complaining about a lack of inventory because we clearly have a lack of inventory. And yet I'm hearing some people talk about the market slowing down. down. I'm not seeing it in the data. Here's the number of new listings. Again, you can see it's basically coming on right on top of the yellow line, which is the 5-year median. The blue line is the current year data. Flipping over to the past the vertical line goes to last year. So you can see last year we had more inventory initially, and I think that was people that got delayed by the pandemic were coming on. Therefore, we had more inventory later in the year and later in 2020 than you normally have, and that dissipated, and now we're just having the normal inventory. Another thing that this says, at least in my opinion, is Prop 19 is basically doing nothing to encouraging people to list their house and move, which I actually thought it would, and that was one of the things that the industry was hoping it was going to do, because if more sellers were selling, we'd have more listings coming on the marketplace. You wouldn't necessarily have more listings on the marketplace, but more listings would be coming on, and that's not what's happened at all. We've had exactly the number you would expect it to have. And smart financial move, once you turn 55, and if you're at your 250 per person cap on your capital gains, you should sell your house and buy your neighbor's home and move next door, because once you're over that 250 exclusion, Uncle Sam now comes in and takes his 40% capital gains. Uncle Sam and Gavin Newsom combined together, so 40% tax gain. So if you buy your neighbor's house, you now get 100% of that tax gain, and you can transfer your property tax once you're over 55. So unless you're real confident you're going to be able to hold on to your home until you pass away, moving it as soon as you can move your property tax basis does make sense, but people aren't doing that, and that boils down to this conflict in real estate that comes up all the time. Real estate is an emotional event and also a financial, and the two are often in conflict. Picking up and moving next door is a huge emotional impact that gains you nothing, even though it gains you financially. So a lot of people are not going to be doing it. This is the number of new offers in every given week, so you can see more new offers than you would expect, and you have the same number of new listings coming on the market. Eventually your reservoir drains down, and that's what we saw. We've gone from 140% in the reservoir down to 70%. We're mirroring the actual drought in the real estate marketplace as far as available inventory. This is the frequency of overbidding. You can see we're down a little bit from the peak, which is somewhere around basically 80%. We got all the way down to 75%. We're back up to about 79%. That's just a plateau. Here I thought maybe we'd flatten down a little bit more. Who knows? Maybe next week we'll come back down. You can see how much lower we were last year, where we thought we were in a strong marketplace. We were only down around 60, 65%. So we're way above that. This is looking at the overbidding, the different micro market areas. You can see Santa Clara County has been outperforming the single family, and next in line is San Mateo County. They basically caught up to us, and we're basically in a tie, I would say, right now. So, and again, that could be all tied into the observation earlier that the expensive homes are hitting record high sale price since 2020. So, it might be something's happening in the expensive area of the market's coming back. For a while there, it seemed that people weren't willing to pay the premium with remote working and those kinds of issues. Here's the heat map for frequency of overbidding. The redder the color, the more overbidding. I will point out that I have not changed anything, but Foster City is now off 100%. So that was accurate data from everything I'm aware of. Although, it is strange to have 100% in a micro market for like 4 weeks running, but I never found a problem. I looked pretty carefully, and now it moved on its own. So I'm pretty confident in the data. The least area of overbidding is the expensive areas in San Mateo County, but it's almost at 50%, but you can pick your own area. This is the magnitude of overbidding. You can see the magnitude, just like the frequency, is way up over last year. You can see that we've been fluctuating. It looks like we've come down a little bit from the peak. If I had to sort of draw a line, I would say we're somewhere around 107.5%, and maybe the peak might have been 108.5%. But a drop of 1%, is that really a big issue? No, especially at this time of the year when it tends to be dropping anyway. This is the heat map for the overbidding for single family homes in both counties. So the redder the color, the more the overbidding. The hottest area I'm picking up right now happens to be Foster City at 113%, tied with Cupertino and Sunnyvale at 113. After that, most of the areas are more like 108, 107%, but that's still pretty significant. Here is the table. So now the design here is you pick whatever area you're looking for, and then you can see the intensity of the market by looking at the color. I have had a problem developing the pricing model, and that's why the pricing is missing. I will try to bring that that back for next week. But you can see that it's not necessarily uniform. Like you come down here and San Mateo County condos in the north part of the county, that Staley City area up in there, you can see the DUI indicates that it's, it's a hot seller's marketplace, but not super hot. But yet the frequency of overbidding, it would indicate the market's hotter, where you come up to the moderate price and the frequency of overbidding is a lighter shade than the DUI. So you're not going to have uniform numbers across the board, but in general, if you have all red, like here, Foster City's red on the DUI, red on the frequency of overbidding, red on the magnitude, that's a pretty hot overbidding marketplace. Same with the San Mateo North County area, even Cupertino, Sunnyvale. It almost seems like the magnitude of overbidding is the most accurate one to determine area, but you can pick whatever indicator you want. I believe the DUI is the best. When I say the best, it's the best indicator of what's going to happen in the future, because it's a supply demand ratio, and that in a free economy drives the price. But the pressure the buyer is actually feeling is going to be more influenced by the frequency and the magnitude of overbidding. And I almost think the frequency is going to be more significant over the two. And it's first mostly because it's in alphabetical order. But if a buyer is willing to overbid, he feels the pressure. The magnitude may be restrained by their financial ability. So anyway, this was a table that would allow you to figure out what price range you were in, what areas work for you, and then what kind of market conditions you'd be facing. We already talked about this graph a little bit. We brought that up, and you can sort of see where the purple arrow, I didn't move that, ends, and right underneath there, you can see the orange line. So last week it was up here, and now it's down here. So in the middle part, it dropped pretty significantly, and up here at the upper end, it dropped pretty significantly. But down here, it's actually doing a little bit better this week. And again, I don't think that's really a change in the marketplace. I think that's a shift of the buyers that buy. And now you can sort of see the two. So the orange line up here is last week's data. And so now down here, you can see that they're even. And now you can see the orange line is below the purple line. But on the higher end, it's below. So it's just, interesting to watch the curve change a little bit. And then this is the pricing map, color coded. Here above, anything in blue is below the median price. Anything in red is above the median price. So you can see the median price is basically San Mateo County, the coast, Mountain View in here. Santa Clara, Willow Glen, Cambrian, and Campbell, they're slightly below the median price. Milpitas is a little bit more, and then Morgan Hill and East San Jose is even further below the median price.
Hi, Richard.
Yes, ma'am.
Oh, okay, I think when you're talking about the median price, is the one you're talking about 1.6?
Well,
on last graph.
I don't have the median for the county, but I think the median
when you say median, it means
the median for each micro market area, and that's the middle number. So for example,
okay, I see.
And I thank you also, because I meant to point this out. Here you can see my problem. I printed the prices without the area and then with the area. So every area is listed twice. So I ran out of room, and that caused problems on copying these colors. So you can see that this number is for South County, and that's South County, but it's not labeled on the top time. And you can see that repeated all the way down. But the middle number is the median. So in general, Campbell is pretty darn close to the median price, and it's at 1.62. The median for Santa Clara County is 1.60 even, but the reason this is below the median is, remember, I'm including San Mateo County, which is a little bit more expensive, so it brings it up. So the median for both is slightly higher. I don't actually calculate normally what the median is for both counties, but we know it's slightly above 1.62, because you can see this is clearly a blue shade. And if I was to pick, the coast here is probably the median, and the coast is down here. So the median for single family homes in both counties is 1.71. Got it?
Oh, yeah. Okay, I see. So the Morgan Hills, because
okay, that's
the blue, so would be the you mean it's below the median price?
It is below the median. Their median price for South County, Morgan Hills and Gilroy, is 1.12. That's 600,000 below the median for both counties put together in a blender, but ignoring condos and townhouses.
Okay, so this blue, so you're comparing 1.6 something?
No, I'm comparing probably closer to 1.71.
Okay.
I'm putting
Oh.
everything here that you're seeing on the map that's color coded, single family homes in a blender and saying, what's the median of that whole thing? And the
Yeah.
number comes out close to 1.71. I don't know what the exact number is, but
Okay.
that's going to be pretty close. Morgan Hill Gilroy is significantly lower than that at 1.1. It's 600,000 lower.
Okay, so that's why it's a dark blue.
That's why it's dark blue.
Oh.
But now if you come up to East San Jose, South San Jose, Central San Jose, it's basically at 0.98. So call it a million. It's $100,000 lower than Morgan Hill, which is
Right.
why it's a little bit darker blue.
Yeah, that's okay. Now, yeah, I got it. So 1.7 is the median that you compare.
Yeah,
For the Santa Clara County.
whatever the number is, it's going to be close to 1.7. And the reason I'm saying that is if you look down here at the very bottom where my cursor is on the right, 1.7 is the median for the San Mateo coast. And you can see how that appears to be no color coding at all. It doesn't appear to be blue. It doesn't appear to be red. So I think this is the median price. The median price for that area is the middle number, which is why I said 171.
Okay. Okay. Yeah, now I understand. Thanks.
You're more than welcome. Thanks for asking. So this table here is single family homes only in Santa Clara County. And the reason I do that, it's the single biggest market area. I've had this table going all the way back to 1997. So I got almost 23, 24 years of history or something. I only can squeeze 20 on the graph. But what it does is it shows you what's going to happen. And all these other past years are comparing to October the 6th. Because remember, I do 35 days, but I'm not to October the 6th yet. We're only on October the 2nd. So I'm putting in the numbers for October the 2nd and going back 35 days. So you have the same number of days, but they don't match up with the calendar. And so if you look at it here, you can see the inventory I have on this chart is 691. That is lower than the 700. Not sure why the discrepancy is, but I will play around with that since I like to know these things. And you can see 700 was the lowest number we've ever had in Santa Clara County back in 2017. You can see the DUIs at 19. That's the lowest we've ever had. So basically, this is the hottest year we've ever had for this time of the year. And then you come down to the overbidding at 107. You can see that's a record high. The one thing that's not a record high that's noteworthy is sales per day. 34.8. It's essentially tied for last year. I mean, there's 6 homes difference. That's nothing. But if you go all the way back in time, you can see from 2012 back, almost every year was higher. And one of the things that's happening, which is why they wanted to pass Prop 19, was the number of sales, even though the valley is getting bigger with, new construction and people moving in, the number of transactions every year has been decreasing because people become more stable. One of the problems I think that the Bay Area has is we grew up rapidly at a different couple time frames. One was right around 1963, another one was right around 1971. We had big population booms, and all we did was bring in the workers. We didn't bring in the retirees and everything else. Now we have the retirees living here, taking up housing spaces, and so their time that they're spending in the home is increasing, and that's why the turnover is less. Plus, with Prop 13, there's a huge financial incentive historically to stay put, and so you've had fewer and fewer sales for the last 2 decades as time went on. Here is the same data, but this is comparing apples and apples, but I have to go back to August because I'm only on September the 5th. So here is if you want to compare a whole month. I don't think that's very valuable. I think the other previous chart is more accurate. And with that, I'm done except for questions. Any questions remaining? Not seeing anyone unmuting. I will end the meeting. Have a nice week, everyone.
Yeah, you too, Richard. Thank you.
You're welcome.
You too.
Bye-bye.
Bye.